Good morning, everyone. It's Wednesday, June the 24th, and welcome to 7investing Live. This is our live stream event we host every Monday, Wednesday, and Friday to focus on several of the stock market's most innovative opportunities. My name is Simon Erickson. I'm the founder of 7investing. I'm joined by our executive producer, Heather Horton. Heather, I hope that things find you well up there in the great Northeast. I know it's been a bit of a hot summer so far, but are you doing all right?
Yeah, doing well. It is hot, as you can probably tell. But yeah, it's been a beautiful summer so far. How are you
Fantastic.
today?
I'm doing well. It's been hot in Houston as well. We have luckily been able to find pools and water sources to offset the Texas heat. But it's been a hot summer for the stock market too. We've seen a lot of IPOs. We've seen a lot of high flying stocks. And a lot of people are asking, hey, Simon, is the market getting a little too hot out there? Are we pushing past the 90s and the 100 degrees? Is it getting a little frothy in terms of some of these valuations? And so I think for today's show, we're going to go in the opposite direction. Rather than going at the high flyers and talking about AI and chip stocks and all the things we've talked about here recently, I wanted to focus on a hidden gem that might be an undervalued opportunity that the market is overlooking right now. And that company is called CME Group. The ticker on that is CME. We're going to be putting up a lot of information that we posted to our 7investing community forum here in today's show, which is going to be kind of neat. I would highly recommend anybody that is interested to come join. This is a free resource. And then also for 7investing subscribers, we really like to get into the trenches and look at some of these companies on a company specific basis. And so we're going to do exactly that with CME Group here today. There's the link that Heather's put up. Thank you very much for the Discord invitation. If you would like to join our 7investing community forum, free to join. And you can always get started with a subscription if you're interested as well, with your first 7 days for absolutely free. So let's jump right in. Let's talk about CME Group. This is a company that the acronym itself stands for the Chicago Mercantile Exchange, but this actually started as the Chicago Butter and Egg Board back in 1898. It was trading agricultural specialties, right? If you were a farmer or someone who was raising chickens or cows or anything else like this, when it came time for harvesting, you didn't want to be at the mercy of whatever the spot rate was of pricing at the time. That could make or break your entire season, right? And so what you would do is months in advance, you would lock in a specific price that you were going to get for a bushel of corn, or eggs or dairy or anything else you were selling. And then you locked it in so there was no uncertainty on the day that you needed to sell things. And so CME Group, began as kind of these future contracts that you could sign for agricultural products. And over time, it kind of evolved. The markets got a little bit more complex. They started to add energy contracts. They started to add commodity products. They started to add contracts for financial products like interest rate swaps, things like this, futures, and even more recently, things like cryptocurrencies. If you're wanting to speculate on the future price of any kind of commodity out there, CME Group is a great way to do that. We probably have some pictures that might be able to tell this story better than I can. You can see the CME Group there in New York City. This is where the trading takes place. Of course, it's a little bit more of a novelty these days. A lot of this is actually just happening on the internet, but there is a trading floor, not only in Chicago, but also all over the rest of the world too. And you can kind of see, if we've got another picture here of their different products. Just one more, and before we get to this one, Heather, that kind of shows how you can do the trading of the product lines. Perfect, absolutely. You see the different asset classes that are available. There's interest rates, there's metals, there's commodities, there's agricultural products. There's 6 different product classes that CME Group is offering that people can speculate and trade on. And why would you want to do this? Well, you could just go out there and say, I think the price of dairy is going to be higher in 6 months than today, so you could trade on it that way if you wanted to. But most of the trading that's taking on is not just speculative retail investors, it's institutions that are wanting to hedge their risk to certain assets. Say that you're an energy company. You want to see the price of oil or the price of natural gas go up over the next 6 months because that would be more profitable for your firm. But just in case it doesn't, if it does go down, you can hedge away some of that risk by buying contracts that would take the opposite position. And so a lot of this isn't just speculative trading, but it's hedges that are put in place to offset or minimize the uncertainties and risks of certain businesses. Now, we do have 6 different product lines that CME Group offers. That was that previous chart. If we can put that one back up here, you can see in the most recent first quarter of 2026, the largest of those 6 product lines is interest rates. Interest rates futures, interest rate swaps, things like this, that CME Group has the largest of its 6 divisions. You can see it's also very exposed to equity indexes, the prices of stocks going up or down, foreign exchange rates, energy, agriculture, and then metals too. There's 6 different product lines. And the reason that I wanted to put this chart up here is because CME Group doesn't necessarily care if the prices of these underlying assets go up or down. Their role in this process is to play the middleman between two counterparties. They do the clearinghouse, so they clear the trades and make sure the trades go through. But at the end of the day, they're capturing that bid-ask spread in the middle of every one of the contracts. So it doesn't necessarily matter if interest rates go up or down. CME Group just wants there to be volatility in these markets, so there are counterparties that are speculating on what the prices are going to look like in the future. Right? That could be for interest rates going up or down. That could be stock prices going up or down, foreign exchange rates, price of commodities, price of energy, things like this. CME Group benefits when there's volatility in the markets. And this is important for investors because it's not very correlated to the S&P 500. What that means is that CME Group will often do very well when the stock market itself is doing very poorly. Perhaps interest rates are going up very, very quickly. And the prices of equities, which are very, very correlated to those interest rates, are falling significantly, right? When interest rates go up, stocks go down. CME Group would be an excellent hedge to the stock market overall because it is capturing more and more profits and more volumes as interest rate volatility goes higher. So this is just a neat business that kind of offsets a lot of the uncertainties we've gotten used to in the market today. We saw the first quarter 2026 financial results, and this is something that I'm going to pull the first of our conversations from the community forum into. This was something that we posted again to 7investing community forum. You saw the link there earlier. We'll put it in the show notes earlier, but kind of a review of what happened in the first quarter of 2026. This was neat, an all-time record in revenue and average daily volumes for CME Group. Basically met expectations for revenue and earnings per share in terms of what Wall Street was expecting, which is something that is quite common for a business like this. But it's really neat to see, 14% increase in total revenue, almost $2 billion for the quarter there. And then, of course, the all-time quarterly high of 36.2 average daily volume, contracts per day, which is up 22% as well. So this is really neat in and of itself. But look at that, what we put in bold. This included record volumes across all 6 of those asset classes. So it's not just interest rate contracts that are going up. It's not just energy or agricultural commodities that are going up. All across the board, there is more volatility in the world this quarter than there was a year ago. And CME Group has capitalized right on that. They're out there saying, hey, we're getting record volumes across all of our asset classes. This has been a very, very good quarter for the business. And we saw that in the financial results that all look very, very good for the first quarter. But there is even more uncertainty, I think, that's coming up in the next 6 months to year to 5 years, as there's still a lot of volatility that I'm expecting the market's going to be hit with. In fact, CME Group stock has been selling off a bit here recently because they think it's not going to be quite as volatile as the year that we've had last year. We did see a lot of uncertainty with certainly the price of gasoline at the pump has gone up quite a bit due to the conflict going on in Iran. We've seen commodity prices kind of all over the place with another conflict going on with Russia and Eastern Europe. And then, of course, the geopolitical uncertainties with China, which are always there. But we've also got something in that most important of the asset classes that CME Group serves, which is the interest rate futures. And this is important because we now have a new Federal Reserve chairman. Kevin Warsh has just joined. He was appointed as the chairman of the Federal Reserve here in May. A lot of uncertainty exists on what is he going to do as the new Fed chair, right? Jerome Powell going out. There was a lot of bickering, if we can call it that, between him and President Trump about what interest rates should be. Should the Fed lower its Fed fund rates to get the interest rates lower, to offset things like tariffs, to offset things like inflation? There was a lot of pressure on Jerome Powell. And now we've got a new Fed chair that's in here. He has stated in a couple of his things that he said recently that he's trying to, he's been critical of the Fed's bloated balance sheet. He doesn't really like that there's quantitative easing out there. Maybe it's a time to kind of pull down a lot of the balance sheet that the Fed has out right there and get a lot of this under control. He has claimed to prioritize price stability and maximum employment in his upcoming term, which could be counteracting what he just said about tightening of the Fed's balance sheet. But it is going to be a job that's going to have a lot of moving pieces just as it did for Jerome Powell before him. I think when there are so many complex political and commercial pieces at play, as well as a brand new Fed chairman joining, being appointed here last month, I think that means we're going to see even more uncertainty and even more volatility in the interest rates that we see coming up here in 2026 and 2027. And again, whatever Warsh does to find the right balance between fiscal tightening to improve the balance sheet or cutting interest rates to appease the presidential administration, along with the other things going on with tariffs, with the energy prices in Iraq and everything, and Iran, everything going on as well. I think all of this means it's going to be a pretty volatile year. I think that's good for CME Group, who's benefiting from that volatility. So this is something to keep an eye on. This is one catalyst for the stock, I think, so far. There's some other cool things that CME Group is doing as well. In addition to the interest rates and the stuff that's going on with that, they've introduced some new products for the retail trader as well. In fact, some of them have been pretty sexy and exciting new products. One of them was for cryptocurrency futures, right? You can now trade not only the future price of what's going on with Bitcoin and a whole bunch of other cryptocurrencies out there, but you can also track now the Bitcoin volatility index to see how much volatility is going on with the pricing of these types of things. The E-mini S&P 500 and E-mini NASDAQ option futures. These are 1/10 the size of the previous contracts. So you go out there and actually place smaller and smaller trades. That's really good for retail investors that might not have millions of dollars ready to use for these contracts for financial hedges. And then the one that's showing on the screen right now, this is a really cool one too. This is a new future product that's going to come out later this year for trading the price of computing power for AI data centers. CME Group has partnered up with Silicon Data Partner to launch the first compute futures. This is going to directly track the on-demand computing price for AI data centers that can, of course, that can be very dramatically different across providers, across different parts of the world, and of course the contract structures that are in place right there. This is kind of interesting that a lot of people are referring to computing power as one of the most important new commodities of the world. And CME Group, just like others, are going to want to find ways to capitalize on the volatility with that as well. We had another announcement, Heather. Terry Duffy, who has been the CEO of this company since 2016, has announced he's going to be stepping down from the helm. Lynn Fitzpatrick is coming in as the new CEO of the company starting next March. She has been with the company for 20 years. Currently, it's president and chief financial officer. This seems to be a very seamless transition. Terry is 67 years old. Lynn is 48 years old. You want to make sure that you've got some good succession planning for a company like this. Terry's going to stay on board as executive chairman. I think this is a good long-term move for the business. It's not going to disrupt anything with him stepping down. Seems to be very proactive, in my opinion. And I think that just a couple other things before we kind of open this up to the valuation and looking at why this is such a good buy. This is a very, very good fundamental business. CME Group doesn't have a whole lot of variable costs that it has to take on as it captures higher and higher volumes, right? You go out there, you build a Bitcoin spot index future, you build a compute future or something like that. You put these products in place, you unleash them on the market, and then you just ring the cash register every time a new contract gets placed out there. Great operating leverage, great network effect, because this is the place where you're going to have counterparties trading those contracts in large volumes. And that's why CME Group was able to capture, get this, a 70% operating margin in the first quarter of 2026. 70% operating margin is very, very high. You see very few companies that are able to do that. And that actually increased 250 basis points, 2.5 percentage points year over year as well. So I think that when we put all of this together and now we look at the stock itself and we say, okay, CME Group, great business, a lot of catalysts on the horizon, really good, operating margin, really good profitability of this business. But curiously, we are getting a pretty good deal on the stock here today as well. Let's take a look at the valuation of where we stand here today. Keeping in mind, just completed its first quarter of 2026. You can see the price to earnings ratio, the price to sales ratio, and then I also really like to try to track that price to free cash flow ratio for a mature business such as this is. And this is data provided by our partner Y-Charts. You can kind of see where that compares today versus the last 5 years. We're getting the most attractive valuation multiples on every one of those metrics just about across the board. of the last 5 years right now. Why is CME Group so cheap? One, the denominators look really good. You got a business that just had all-time records in sales, in earnings, and in free cash flow. And in terms of average daily volumes, it was an all-time high for this business. So the denominator is really, really high. So that pulls down the multiple by itself too. But there's also a lot of uncertainty in the market about the uncertainty of CME Group's future. In addition to it trading kind of these commodity products, there's a rise in prediction markets right now. We're seeing companies like Kalshi, that are out there kind of making it where you can bet on anything, you can speculate on anything out there. Is that going to disrupt this cash cow that CME Group has provided for decades? And I don't think so. For one, CME Group has already partnered with FanDuel to enter prediction markets where you can have counterparties kind of bid on whether something is going to happen or not happen for sporting events. So they're not completely blind to this. They're not going to get disrupted. They're going to play a part of this as well. But then also, there was kind of a couple of years ago, it was back in 2024, we saw another competitor called FMX Exchange that was also offering interest rate futures. And this was the last time that we actually saw a really good buying opportunity for CME Group. Thank you, Heather, for showing what we put in our community forum. Like I was talking about just a moment ago, here's kind of some of my thoughts on what's happened the last couple of years. CME Group back in November 2024 was the last time we upgraded our conviction in the stock to what we call a strong buy. And again, this was because of kind of a narrative. It's FMX was going to come in here and compete right on the same turf that CME Group was used to competing in for those interest rate products. The stock got really cheap. We named it a strong buy, and within a couple of months ago, March 2026, this is a stock that was up 51% over that, call it year and a half since we upgraded our conviction, and that was nearly triple the return of the S&P 500 over the same time frame. I point all of this out because we're getting a similar buying opportunity today. It seems like CME Group has fallen significantly in the 3 months since March, since we kind of had that high point out there. And we're back in those kind of valuation multiples that make sense for this to being a buying opportunity. The fundamentals are still there. The catalysts are still there going forward. We're just getting a much better deal on the stock. And so I'm going to transparently say on this show that we did just upgrade it to strong buy conviction again here in June 2026. And I don't talk about that a whole lot here publicly. That's something we generally just talk about behind the paywall for our subscribers. But I do want to kind of point out a little bit about how our conviction process works, what our strong buys are, what this tends to look like if you sign up with 7investing. You get kind of these trade notifications, CME Group being one of those right now that we just upgraded to strong buy conviction. So I think this is a really good entry point for this best-in-class operator. I'll wrap it up at this point. A fantastic business, great leadership, great tenure, great profitability. The catalysts are on the horizon, and I think that it's going to do just fine. And again, no matter if you like the volatility that we're going to see here in 2026 in the stock market or you hate it, this is a business that actually thrives when there is volatility in the markets. A great hedge, not just for the commodities and the things that are traded on this exchange, but also for us as stock market investors as well. CME Group, CME, putting it back to the strong buy ranks this month here, Heather.
Yeah, it's a John Palos quote that the only certainty is uncertainty, something along those lines. And yeah, it's really interesting that there is a stock option to buy that is just letting you profit from volatility while you have to watch everything else jump around. CME is also, if people know about stock market history, the onion contract laws and that whole debacle. That was
Tell me,
CME
I'm
Group.
unfamiliar. I would love to hear this story.
Oh my goodness. Okay. So
If
there
you
is a
remember.
whole law about this. Hold on, I'll get this right. It was two farmers bought up a bunch of onion contracts from the CME Group, and then they flooded the market at this high rate with onions that they had grown. And they had gotten together and basically were like, hey, if we all buy out the onion contracts, we can drive up the prices. And it ended up making onion prices skyrocket and then drop. I might not be getting this perfectly correct. I highly recommend looking it up. It's a really interesting story. But it did lead to the Onion Futures Act, which banned officially the trading of onion futures in the United States.
Love it.
I read a book about it years ago, and it's a really interesting story about stock market manipulation, and it all came through CME Group.
You've heard of tulip mania. This is onion mania, kind of the other
Yep.
problem. Okay. Got it.
Yep. But yeah, it's a really cool stock that, yeah, you can feel a little more comfortable during this time of everything being so volatile. And I really like that it is trading so low. It's definitely something I'll look into. I don't own it, but that might change.
There's something else neat as we're kind of wrapping this up is the capital allocation program. I mean, capital allocation is, you take all the profits and the cash flows you make, and then how do you actually reward your investors with those, rather than just stockpiling cash on the balance sheet. And CME Group has had a longstanding policy that it's going to pay out half of its earnings as a dividend, as a variable dividend. So you've got a small quarterly dividend you're paying every single quarter, but then at the end of the year, they say, hey, this is how much money we made this year. We're going to give half of it to you, Mr. and Mrs. Investor, and this is going to be the special dividend we come out with in the fourth quarter. And so that's really neat, right? Like to be able to get like this fat dividend payment at the end of the year from CME Group has been very rewarding and something they focused on for years. But back in 2024, they also said, hey, we're going to have a little bit of dry powder too. We're going to authorize a $3 billion share repurchase plan as well. So that if we ever see our stock price go down to where we think it's a really compelling opportunity, all this cash flow that we're making and all this money we're printing, we've got it there and we've got it ready to deploy whenever we want to. They haven't really touched that in the 2 years since then, but we did see, interestingly, Heather, this past quarter, they put $500 million to work on buying back their own stock. And I think they're probably going to do that again here in the second quarter too. They've got the cash available, there's cash on the balance sheet available. They've got the authorized shares. Just put $500 million to work last quarter. You still got $2.5 billion on that authorization. I wouldn't be surprised to see them reducing their share count even more, in addition to that growing dividend. It's kind of a nice 1-2 punch if you're looking for some income and a growth opportunity at the same time.
That's what every investor wants to see out of a company. That's really exciting.
Absolutely. So CME Group today, CME is the ticker on that one. Easy to remember. I would recommend checking it out. Again, check out that community forum we've got in 7investing. There's so much that goes on in there. I think that I don't even do a good enough job of representing publicly how much in the trenches we get into that. And it's not just me posting insights, but the entire community. We've got more than 1,400 individual investors in there right now that are contributing and sharing thoughts, pointing out things that, maybe we don't all see all the time. And then all of a sudden you've got kind of this collection of insights and cool stuff that's going on out there. CME Group being one of those we just talked about. Oh, go ahead, Heather. I'm sorry.
Oh, and I was just going to point out that Discord community is free to join.
Mhm.
But if you join at 7investing subscribe, you get access to all the back end things first and all the stock picks.
Yep, that's right. Yeah, if you join the forum, you get some channels for free. And then if you sign up at that 7investing.com/subscribe link, we've got some APIs that connect the dots so you can start unlocking all of the channels that are in the forum, including the CME Group discussion. Some neat stuff going on with that one. I wanted to point out, I call it an undervalued kind of gem out there in a world that has got some high flying stocks. If you want a little bit more stability and a little bit one that'll let you sleep at night, consider CME Group. Speaking of companies that are volatile, we've got to go back and talk about Rocket Lab again on Friday. I cannot tell you how many texts I've gotten within the last week, even from people just saying, hey, what's going on with Rocket Lab stock, Simon? Hey, why is the stock falling? What is going on with this? Let's just talk about it again on Friday, Heather. It's the right time. The stock is now under $100 a share again. It peaked just a couple of months ago at $150 a share. We're going to revisit what's going on with this, the thesis for investing, and what we think is a good price target for it. A lot of that coming from one of our previous conversations just a couple of weeks ago here on this show. But I do think this is the right time to be talking about that. And as an investor's perspective, what do we expect this stock to do longer term? We're talking about that one on Friday, and then we're going to follow up with the Chit Chat stock guys. Brett and Ryan are going to be back next week. Stay tuned for that. Always a fun conversation with those guys as well. But as for today, Wednesday, June the 24th, hope you enjoyed our conversation on CME Group. Have a great week, and we'll see you again on Friday.